Inflation essentially inflation essentially unchanged, 8.55% versus 8.56%. This surely should hold no implications for a rate move either direction.
Yes, the inflation outturn was actually not what we expected. We were expecting it to go up a bit to just below 9%. This comes as a bit of a surprise considering the time of the year in which it is, and for pricing conditions usually within this time of the year tends to go up. So that was what our expectation was. In terms of how it would affect the rate decision next week, chances are that it will cause them to hold the rate still. It would justify or at least support a move to hold the rate. The central bank has been resisting the urge to revise it down and revise it up again amidst instabilities within the economy. Their natural move is to bring it down a bit further, but in the light of this recent release, there's a strong chance that the rate will be maintained.
Right. Now, the surprise that we saw today, is that a big enough surprise to warrant an examination of the figures in terms of the collection and perhaps put a question mark on the credibility of the figures?
I didn't quite catch that. Could you please repeat that question?
I'm just trying to find out if the surprise that we saw in the rates, in the inflation number coming down when the market was expecting an uptick, whether that's enough to get people to question the credibility and the veracity of the numbers.
Well, yes, you're right. The Statistical Services unit has come under fire recently, and its credibility is a bit short now, but that said, I don't think that this would be a huge. I think people will still believe the numbers. Analysts, I mean, the people that we've interacted with and have spoken to are quite confident that they have a lock on this currently. The way it is, I mean, that it didn't come down by a larger magnitude in itself shows that there is some pricing pressures within the economy that are acting for or that are increasing.
Okay, so let's talk about the potential impact then from that weaker cedi currency. What should we expect going forward from where we are? What's your year-end focus for the inflation rate? And then let's take a chance and the opportunity as well to talk about 2012.
Okay, for by the end of the year, we expect inflation to increase slightly to just below 9%. And that more or less would be as a result of, yes, there will be currency elements acting in. The weather is a bit dry at the moment, so that is also likely to affect food supply, which we expect there might be a few shortages as well. Regarding possible impacts on the currency, typically around this time of the year we see there's a lot of demand for U.S. dollars, particularly as importers tend to bring in a number of things as they go in for letters of credit, etc. Chances are that is also likely to be a bit more volatile. But provided that the central bank steps in and intervenes when shortages do occur, that is likely to be kept at bay.
Okay, so let's talk about the outlook for inflation then for 2012. I mean, we have a number of factors to deal with here. We're talking about some increases on the rollback on subsidies for some fuel prices. And then we also talked about public sector wage hikes, as well as, of course, the weakness that we've seen coming into the cedi.
We see inflation going, or at least hovering within the band of 8 to 10% in 2012. And this would largely be as a result of things that you've already mentioned. Yes, there would be wage pressures. There's also likely to be revisions in the prices of locally refined petroleum products. That in itself is quite significant. In fact, for the last couple of weeks, there is rumored to be about a 15%. There's rumor of talk that the prices may be going up by about 15%. But we're yet to get an official word on that front. And pending whatever happens on the food supply front as well, that is likely to change. But definitely we are looking at on average, higher inflation figures in 2012.
And for 2012, finally, Nii, let's talk about what you expect in terms of the benchmark rate here. Potentially, what sort of percentage change do you see on the benchmark rate? Let's talk really. So essentially, what I want you to give me is the year-end figure for 2012 for the benchmark rate for.
By benchmark rate, are you referring to the policy rate or the benchmark yield as in the 91 days?
The policy rate.
The policy rate, okay. But the policy rate, we see it possibly increasing by a maximum within a band of about 100 to 150 basis points. And that would largely, be as a result of pricing pressures, and it would be the central bank's move to try and cool things down within the economy. So if we see it going up, but within a band of 100 to 150 basis points by the end of the year.